Welcome to the StockMiner.com studios. I'm your stock miner, Brian Johnson, entering a new week of trading. I just finished options expiration week, which was overall pretty boring. Wasn't a lot of volatility during the course of the week. However, there hasn't been a ton of volatility over the last few weeks of trading. A couple of days here and there, move us one way or the other, and then the rest of the time is spent either pulling back or moving sideways, something to that effect, and that's exactly what we saw last week. You can see by the charts that we had that big move up here a couple weeks back, basically sideways. Little move here, and then a pullback or basically sideways when the week was all over with. Coming into the new week, we have Apple reporting earnings. We have a couple of things that may move the market or may move parts of the market. For instance, Apple I don't think is going to do a whole lot for the S&P. It may move the Nasdaq, but we have seen quite a few things report in the Nasdaq where that particular stock will move considerably. However, the Nasdaq as a whole doesn't necessarily move with it. However, the Nasdaq is very strong. It is very strong lately, especially the NDX 100. We're talking about the 100 strongest stocks in the Nasdaq. That has been moving precipitously to the upside. Very, very, very strong movements. This could just carry over into the elections. A lot of this grind up, move sideways, grind up, move sideways. If the markets or if the big dogs in the market had any sense of maybe wanting to really do the Democratic Party in for this next election, it would be to crash this thing, or at least pull it back. I wouldn't say crash it, but pull it back over the next couple weeks, or at least coming into the election time. In most cases, then, people will be quick to blame whatever party is supposedly in charge, and that would be the Democrats in this case. But if they can keep it steady, if they can keep it grinding up, moving sideways, grinding up, it might stay that way into the Fed talk, which is right around November 2nd, 3rd, where they're going to discuss more about monetary easing. Then, of course, it'll come down to the dollar and whether or not the dollar is going to make a move one way or the other. I would expect that if the dollar made a quick move to the upside, that would start to affect the markets in a more volatile way. If and when that happens. But, they've been screaming about the dollar being low and whatnot for quite a while now, and the dollar just just continues to grind its way downwards. I do believe I read a report this weekend, too, where it said Bernanke has no real interest in necessarily helping the dollar at this point, and that if it's affecting other countries, they're just basically going to have to tough it, to suck it up. He doesn't really care about how it's affecting other countries at this point. He's more concerned with the U.S. economy at this point. So you can take that for what it's worth, and we'll see what kind of reports we get coming into early November. But as for the new week of trading, we're really just stuck again in this little trading range where we're just going to continue to watch, as we have been, for breakouts one way or the other to take our trading, to put our trading money to work for us. Easiest way to do it, best way to do it. Yeah, it's been a drag. Hasn't really been a lot of opportunities, but if you've taken the opportunities when they've been presented, been able to pull a few dollars out of the markets over the past few weeks. If we just look at the daily, you can also see that we are starting to enter now this upper area for the Dow. Dow is a lagger. A lot of the other indices have already hit this and or surpassed it. Nasdaq, actually, I should just say the Nasdaq has already done that. It's already blowing past this, headed up towards its next level of overhead resistance. That this one's working its way and grinding its way upwards towards that, and we had breaks over 10,900 was an entry, and then over 11,000, then over 11,100 is the next area to watch, but then it's 11,200 to 11,250. I'd be very cautious up in that range as well. I will repeat that right now I'm not taking any major positions, long or short, on the indices at this point. Why? Because it's just not worth it. There are individual stocks that are moving up and down. Those are the ones I'm going to be watching. I do not care so much about a 0.2% move in the markets one way or the other when it's chopping sideways and slapping people's hands all day long. I would much rather find a stock that's trending nicely and make myself 1-2% during the course of a day, a week, whatever it might be, which is well above the average of what the indices are doing. So I'm really turning my attention more towards individual stocks as opposed to the indices right now. If you are an ETF player and like to do that, there are still entries, but you'd want to wait till it got above 11,200 up here. And now that the 20 has reached this area here, I really would not obviously slap your hand for any kind of a short below the 10 I think there's a line of 875, 10,875 for a short, if you want to look at that line coming into the new week of trading for your short position. Here's a Nasdaq running straight up. This thing's just absolutely ballistic right now. So coming into the 2100 overhead area, moving right to a daily, you can see what we've done. I had to back this chart out just to start to find where the where the next level of resistance was at, and you can see that it's coming up here. Now you are going to hear some pundits talk about the huge inverse head and shoulders now on the Nasdaq. This is a shoulder. Here's your head. Here's your right shoulder. In line with that, they might make this into an inverse head and shoulders, which would give us a target of what? Oh, about $1 billion on the Nasdaq to the upside. Is it possible? Anything's possible. I wouldn't be looking at that, though. In my own terms of trading, would certainly not be entertaining that at this point. There's still a lot of work to do up here in the Nasdaq. We're very, very, very extended at this point. So watching this 20, let's call it 21, I don't even know exactly where this is at. I'd say right around the 2150-ish area by the time we get up here. That'll be the next overhead area for the Nasdaq to be watching. But you can see the climb we've had. It is a very, very strong move by the Nasdaq over the last few months, actually. Here is the bigger area to be watching. Now, we broke the 2060 area, and we closed above the 2060 area pretty decidedly, too. It wasn't like we closed on, around, at it. We're decidedly above it. So the bears, if they're going to want to, make any kind of a move, will want to definitely over the next week or two get this thing back below that. But for the time being, bulls firmly in charge as we saw this move up, put in a high base, and that high base was confirmed not only by the push up above the 2040, but above the 2060, and ultimately a close above that 2060 area. So Nasdaq still firmly in charge up here, looking very strong. SPX has yet to follow that, but does not mean that it can't. They just happen to move a little slower than the Nasdaq typically does. Remember, we're looking at the 100 strongest Nasdaq stocks when we view the NDX, whereas the S&P usually moves a little bit slower than that because you have a lot of other dogs to work on. Banks have not been doing well, and that has been kind of holding back the SPX2 from really moving upwards. But if the banks get a bounce and the rest of the market continues as it has been, this could start to see its overhead areas broken as well. That next area here is above that 1185 mark. 1170 to 1180 for me is kind of a no-fly zone at this point. Want to wait on that. More aggressive traders can look for a short below 1165, but I like the 1150 mark for the more conservative short. If you want to play these markets here, one way or the other, do suggest you stay with intraday trades and just be very careful. Take your profits. I do think there's a little bit more risk to the upside now at this point, just at this second in time, than there is down the road. So wait for a pullback. I'm going to wait for a pullback, see if I can't get a better entry here back into the markets to the long side. As you can see, we are doing exactly what the Nasdaq does, or did. What is that? Move up, high base. We're holding this overhead level of around 1170-ish, 1173, whatever this might be up here, but around the 1170-ish area is where this support is at, and it's holding beautifully at this point. So into a high base formation, and high bases typically are still bullish. So for those of you that are trying to call a top up here, just warn you against that. Be very, very careful. Watch the 1196, this area for overhead resistance this week. 1195, 1196, somewhere up in that area. Watch that very closely coming into the new week of trading. Anything above that then, and a push up and over 1200, 1220, and then maybe even 1250. There's some pretty good resistance up at 1250, but it's quite a stretch. Maybe not all at once, but I wouldn't certainly rule that out in the before the end of the year. A push to 1220 or 1250, that's not that far away. By the end of the year, coming into Christmas time, certainly not out of the question. VIX on a daily, you can see still stuck in this little falling wedge, but this can stay in a falling wedge for a very long time. It can also plummet out of the falling wedge. We'll keep our eye on this coming into the new week to see if it confirms what the market's doing. If the market continues its roll upwards, though, that should lead to a little further drop in the VIX itself. As it falls downwards here, that only prepares options traders for a little better price to be buying some options with. Here was the weekly finishing down here as well. You can see it's holding this little bit of support line that we have right here, so we'll see if that manages to drop through that coming into the new week. Apple on a 60 is a monster. Keep going long this thing. If you're going to do anything with Apple, don't go short, just look to go long and take some intraday profits on this. You can see that for the day it was up 12.5 bucks just on Friday alone. Pretty amazing little stock moving right up into earnings, which I think is. I thought I read it was tomorrow. Could be Tuesday. I can't remember. But Monday, Tuesday, I think it reports. It's just continuing its scream upwards, defying gravity, if you will. Ever since it hit this 240, 235 mark back here, it's been nothing but straight up, and that has been the call from my side for a long time. All the way up has been to do nothing but watch Apple to the upside, and it's been playing out well. This doing exactly what the Nasdaq did too. How reminiscent is this right here? This little move up, high base, and now another move up, pushing Apple to new heights above 315. Might be a good intraday long play again. I do not hold over earnings, just so you know. If you want to, that's great, but you're gambling. So if it pays off, fantastic, good for you. I'm happy for you. But I never hold over earnings. I just don't like taking that chance. Even if I would have been right, I just don't like taking that chance. FAS on a 60-minute is also starting to drop. I like it below 21.25 for a short. And maybe back above, well, probably way back up into this area before I start looking at any kind of a long play on the FAS at this point. But below 21.25, I think gives you an opportunity here. Still choppy. Look, since back here, since beginning of September, we're sideways now. This thing isn't moving anywhere. So below that $21 area, still not a bad opportunity there to play this thing to the short side if you're a swing trader. So below 21 there. FAZ then moving itself up and back above 1350 for an intraday trade to the long side. Back below 1230 for a short. You can see what I'm not convinced I love these lines yet, but for the time being, I'm going to hold on to them, see if they work. Above that 1350 takes us back to 14. Be watching closely for that over the next week. If it starts to move back down, I'm not going to give you a short entry at this point because it's just kind of stuck in this wedge, doing the same thing the VIX is doing basically. It's just kind of stuck in a wedge right now. I'll wait for it to make a bigger move before I make a decision with my money. That'll do it for today's video. Coming into the new week, just be, as always, cautious to the upside, taking those intraday profits as you get them, because you never know when the market's going to turn around. You never know if it's going to move up 100 points or 50 points or 300 points. But lately, what we've seen is one day of really, really good movement, one direction or the other, and the rest of the days during the week, 4 days of basically nothing. So we'll see if that continues to repeat itself on and into the elections. And I'll be back with you again tomorrow night. Bye.